Hi, I'm Marcel with Guaranteed Rate.
Hey, I'm Katie Beck with the Christie Cannon team.
And we decided to just shoot a quick video. Obviously, it's rainy outside and there's not a whole lot of activities going on outside. And so Katie dropped in to talk about some of the conversations that she's recently had with her clients.
I sure did. So one of the things that we've been talking a lot about is some people's leases are up at the end of the year and they've been looking at buying versus renting, which I know is something we've talked about before. And for whatever reason, this 20% down that used to be the big thing for your down payment is still stuck in people's heads. And I keep hearing that, oh, we can't afford it this year. I don't have 20%.
Yeah, and in fact, I'm really shocked that, this day and age where there's so much information available out there on the internet that people still are under the assumption that they have to put 20% down. And that's just not the case. There's lots of different programs that are out there from FHA loans, which typically will be 3.5% down. You have some 100% programs, conventional options at just 3% down, USDA loans. There's so many different loan programs out there available right now to kind of minimize the overall cost for someone buying a home. And if someone's in a position to where they're renting the property right now, it's not like renting is absolutely free. When you rent a home, in essence, you're typically going to put down 1 month on a deposit. Then you have your first month's payment due that time as well. And then you have within 30 days another payment due. So people can very quickly be in a situation to where, they end up spending $4,000, $4,500, $5,000 just to lease or to rent a property, when that money could actually be used to help buy a house.
Right. And going back to one of the other things that you said, I think it's important to touch on that there are so many different loan programs, because when I do tell people you don't need 20% down, there's so many other options, they say, well, I don't want to do FHA because I don't want PMI. I don't want mortgage insurance.
Absolutely. And that's a really good point. There are so many programs out there where literally, if I took every program and discussed with a client, 15 or 20 minutes on every program, we could literally be talking for days. And so what we generally do is have people go ahead and fill out a secure online application. They do that at dallasrate.com. There's no cost to do that, but at that point, we gather all the preliminary information and then we start digging for the specific programs that they may qualify for. And then if someone is in a position to where they're trying to minimize their overall funds to close, we'll show them an FHA loan, maybe a conventional 3% down loan, and then also compare it to a USDA loan, to where even if they come to you and they say, I don't want an FHA loan because there's mortgage insurance, they still need to have the details and the information as to why is it that this program is going to be different from the other two. And it may just be that FHA loans actually have an overall lower payment, significantly lower than possibly the conventional loan programs, depending on credit score. So FHA may actually be the best option, but the only way you know what the best option is going to be is to truly run the information, lay the programs down side by side to where you're looking at the FHA option, the conventional option, the USDA option. And if someone's a veteran, 100% financing for a VA loan is it's golden. It's really a good opportunity.
Well, and just like so many people think you need 20% down for a conventional, mortgage insurance doesn't necessarily have to be as scary as I think a lot of people assume it is.
Absolutely.
So seeing those in front of them is a really good thing. There's also other things that we'll find out throughout that, such as are they a teacher, a police officer, a doctor?
Without a doubt. And again, that's why that online application is so important, because when someone does submit the online application, we see what vocation they're in. We see if they're going to be eligible for a city program. Frisco has a city program. There's also teacher programs, police officer, firefighter programs. There's lots of different specialty programs that sometimes consumers can qualify for. And literally, we don't know that information until we gather everything through that secure online information, and then just kind of put all the program options together side by side.
That's awesome. So how far out do you think somebody should be applying?
That's a really good question, but most of the time people apply after they found a home, which is the worst time to actually make an application. And the reason being is because, when you end up making an application on a home, there's a possibility that there's going to be some things on your credit that are not right. And everything can be fixed over time. So if someone makes an application, let's say 6 months before they're actually ready to buy, that gives them time to fix anything on their credit, which may be an error. I actually had a client to where they had an account with Sears that was a charge-off account. they had never been in a Sears. So they actually had to go through the process of having that account removed, and it took them about 3 months or so to get that off. Had they waited until they actually had a home under contract and then found out that they had that charge off and their credit score was actually reflecting much lower than it should have been, they would have been in a position to where they possibly couldn't have closed on that home had they not had their credit pulled early, just to make sure that all the T's were crossed and I's were dotted.
Wow. It's also good to do it ahead of time so that when you do put in an offer and you are ready with that pre-approval, you aren't going to have that extra time. Or if some of the programs do have limitations as far as city or what kind of home or price point you're in.
Absolutely. And so really, it's almost like going to the doctor. Whenever a mortgage company is gathering that information through an online application, it's like taking your blood. They're checking to see what do the assets look like? What do the income look like? What are the special circumstances to where someone may actually qualify for some unique programs that other people don't qualify for? And the only way to do that is really by gathering all the information and taking a look.
And so I know when I've worked with clients who aren't pre-approved before my initial meeting with them, I send them over to you. And about how long does that process take to get them pre-approved?
The pre-approval process or the pre-qualification process doesn't take that long at all. I mean, literally, it takes about 15 minutes or so. They fill out a secure online application, and that doesn't take that long. And at that point, they can go ahead and make offers on properties with that pre-qualification letter. However, if a client is serious about purchasing a home, they can actually go ahead and get pre-approved. That means that they turn in the documentation, bank statements, tax returns, and the like. That can actually be fully underwritten by an underwriter, and at that point, then they'll have that full credit approval, meaning that they're just now looking for a property, which also means that the window to be able to close a house is much shorter. Right. And in fact, I've seen them, 15, 16 days because someone went through the process up front and did get that full credit approval, as opposed to just being pre-approved or getting that pre-qualification letter.
That's awesome. That's really quick. It doesn't put a pause on your home search. We can still go look for the right home. We're just better equipped now that we have that in our hand.
Absolutely. And I can tell you, a listing agent loves nothing more than when you call them up and say, hey, listen, this file has not just been reviewed, it's been underwritten.
Right.
Literally, as long as this house ends up making the appraised value, we're good to go. And so with that, obviously the listing agents, their interest is in making sure that they best represent the seller. And so being able to bring the seller a buyer who's already been fully approved or credit approved, there's nothing better than that.
Right, sure. Now I want to touch on one more thing,
Sure.
Going back to the different programs, and we talked about the VA loan being 100% financing.
Correct.
That's an amazing option that I think people just don't maybe know as much about.
Without a doubt. People that do have their eligibility for a VA loan, they are truly the servants of our country. And they have earned that right to be eligible for a VA loan. And it is 100%, meaning that if someone's purchasing a property for $300,000, they can actually finance 100% of that, and there's no monthly mortgage insurance involved. So really, it's one of the best loan programs out there. Not everyone ends up being eligible for a VA loan. It's truly only those that have served us, served our country, and have that certificate of eligibility to where they now are going to be eligible for a VA loan. So it's really, it's an incredible program. Generally, the interest rates are right on par with conventional loans. And so overall, if someone is eligible for a VA loan, 9 times out of 10, even if they could get a conventional loan, the VA loan is going to be a better option for them.
Sure. That's awesome. Well, thank you so much for taking time on this rainy day. Just thought we would chat a little bit.
Absolutely. But if you ever have any questions, please contact me or Katie. We'd be more than happy to answer anything you have. Marcel with Guaranteed Rate, 972-672-3246.
I'm Katie Beck with the Christie Cannon team, 214-592-6337.
Have a good one.
Bye.
Thanks.